Hey guys, welcome back to our channel. Thank you for joining us today. Today, we will speak about the worst mistake you can make in crypto, 97% loss. Please watch the whole video to find out all the details. And guys, don't forget to like, share, subscribe, and click the bell notification. Alright then, let's get started. Throughout 2021, the cryptocurrency has had a wild ride, reaching an all-time peak of $68,521 on November 5, 2021, before decreasing. A drop in global stocks, fueled by concerns about a new COVID variant and high rising prices, has spilled over into the cryptocurrency market, compounded by worries about more regulation. At the beginning of December, the price of Bitcoin and many other prominent crypto assets plummeted, causing a mini flash crash in valuations. That is the current state of affairs for Bitcoin, although no one can say what a normal Bitcoin price is. Here are some of the worst crypto mistakes you can make. Number 1. Buying at an all-time high. Investing when the market is high or at an all-time high maximum is one of the biggest downfalls of an investor. Whenever it comes to investing, be strategic about how you'll get your money into the market while minimizing your risk. Numerous experienced investors prefer to use a DCA, or dollar cost averaging tactic, to minimize vulnerability. They consider purchasing a certain amount of cryptocurrency on the same day each month or week. They may raise this amount slightly if the market is exceptionally down or decrease it if it is highly upregulated. Number 2. Purchasing based on a low price. Low prices do not always imply a good deal. Prices are sometimes low for a reason. Keep an eye out for cryptocurrencies with dwindling user numbers. Frequently, developers abandon a project, ceasing to be updated, rendering the cryptocurrency insecure. Number 3. Becoming a victim of a con. Scams involving cloud multipliers. Fraudsters occasionally contact victims via email or text with an investment opportunity. They plan to return double or triple the number invested in Bitcoin to investors who send their cryptocurrency to a specific digital wallet. Realize that free money bids should always be treated with caution. Spoofing. When unknowing traders rush in to try to get a piece of the action, the criminals cancel orders that they never intended to fulfill in the first place, causing the price to fall in some cases. Fraudsters may own a large amount of a cryptocurrency at any time, complete pre-mining much of it before it is obtainable to the general public. They can inflate the price by advertising it on social media and offering it at a premium cost on cryptos. Then they vanish. Malicious wallet software. According to the best crypto advice, stick with large brands and crypto wallets like Ledger, Trezor, Exodus, or MetaMask. Dodgy or unidentified cryptocurrencies on the Google Play Store or the App Store can use dodgy programming to steal your crypto assets. Counterfeit coins. It's impossible to distinguish what's real and what's not with so many cryptocurrencies on the market. Criminals can steal your identity and, in some instances, your hard-earned money if you buy counterfeit coins. They accomplish this by phishing, which is when they persuade you to click on links and emails that download spyware onto your system. Number 4. Going all in. Some of the more dubious financial products advise you to bet as much as possible to optimize your profits. It is a fast track to the poorhouse. Excellent crypto investment advice would be to invest a small amount of your capital, say 5%, and always have a cash reserve that is never involved in the industry. Number 5. Thinking crypto is easy money. They are earning profit via investing in any financial tool, equities, commodities such as silver and gold, or cryptocurrencies. Anyone who claims otherwise is most likely attempting to dupe you into committing crypto blunders. Number 6. Investing only in crypto. When it comes to broadening your portfolio, crypto is fantastic, but it's equally necessary to diversify across asset classes. Stocks, bonds, and mutual funds are the maximum straightforward additional asset classes to evaluate. However, real estate may be a choice for some. Here, the goal is to reduce your risk. Because cryptocurrencies are a famously volatile investment asset, broadening your portfolio may help you gain money as the year progresses. Number 7. Not captivating profits. Finally, one of the most common blunders made by investors is failing to take profits. We get so happy when we watch our investment rise that we believe it will soar to the moon that we resolve not to accept any returns. Then the cost plummets. When you check your portfolio on some days, it has dramatically increased, while it has diminished substantially on other days. There is nothing wrong with profiting along the way in either route. When you can, eliminate your initial investment as a profit-taking method. Because everyone's circumstance is distinct, you may decide to borrow even more money once you've met your financial goal. Well, that's all we have today. If you enjoyed today's video, don't forget to like, share, and subscribe. Until we see you next time, ciao!